So yo guys, in this video I'm going to do an analysis of the US 30 chart. This week we're going to see a decline in an attempt to retest liquidity down here. So we've been trading this sideways range. I'm going to actually clear the drawing tools. So we've been trading in a range. This range is from this level up here, which is our level of liquidity, and what I like to call equal highs. We've been trading at equal highs, and we swept the high from a few weeks ago. We swept that on Friday. So now I'm expecting price to begin to target the level of liquidity down here. And I just want to make it clear that I am not bearish on the market over the long term. The only purpose of price coming down after sweeping this level of liquidity, which was also a build-up of liquidity at this level, we would have had two levels of liquidity swept, and then we would have seen price trade in the zone over the past couple of weeks, just moving sideways since about the 19th of May. This was another build-up of liquidity, and then we had equal highs set up here, which was swept on Friday, as I mentioned. So now today is Monday. We're entering the middle of June. If we jump onto the weekly chart, we can see that, price has been trading in this range for the past couple of weeks. So what I'm expecting to happen is price to come down and sweep out all the buyers. And when I say all the buyers, if we hop onto the 4-hour chart, we can see that there's quite a few buyers positioned in this area. This level has not yet been swept, and that's this line right here. This level of liquidity has not yet been swept. So we should expect this level of liquidity to be targeted. We had buyers position on the 5th of June. On Thursday, position here. We've had some buyers position here. We had buyers position here as well. So this is all levels of liquidity. We've also got quite a lot of buyers position at this level as well. And the reason I know this is, once again, this low was not swept. So this means that this is a pool of liquidity resting at this level. So all of these buyers are going to need to get swept out before we can see price, and if we hop onto the daily chart, before we can see price begin to head higher. And the reason it's important for price to sweep these levels of liquidity and sort of scare the market into a potential decline is because institutions need to be able to position in retail stop losses. This means that basically retail needs to be willing to sell into the hands of institutional buyers. So what we're going to see this week is potentially institutions force price lower in an attempt to sweep out liquidity here, and then from here we'll reanalyze the market and see whether or not price continues to go down. My belief is that we do form a base right here, potentially having somewhat of a decline to sweep these buyers out. But because we have liquidity here as well, there is still a chance that we come down to this level. That's not my base case. My belief is that we'll bounce off this, potentially this level of support, and hopefully hold. So that level of support is right here. Hopefully hold the market down here. And after this happens, then price will be able to push higher aggressively. And if we add our moving averages, we can see that, if we take a look at it quite deeply, this pullback from here should target this level, this 50-day moving average. So this will give us confirmation that this decline was expected. It's kind of like price has been traded in a bit of an overbought condition, and we need to get some momentum out of the markets, and that's why we've sort of just been trading in sideways range, because there hasn't been enough momentum to push price higher. So once we can get price to come down like this, sweep out our levels of liquidity resting here and here, then we can potentially start to see price rallying much higher in an attempt to target this level of liquidity here and to fill the imbalance here as well. So that would be the next level that I'm looking at on the charts. I just want to make it clear that I'm not bearish on the markets. As you can see on the monthly chart, what we can see is that price is actually trading in quite a strong uptrend. So we've seen the monthly chart pull back into the 50-day moving average and bounce aggressively. So if we see price pull back down into our 50-day MA on the daily chart, which is this level right here, and if I plot this on the chart for us to see where it is on the monthly chart, we can see that it's just a retest of our 20-day moving average. Even if the market was to close here by the end of the month for whatever reason, or for whatever reason we don't get all the way down there by the end of the month, into July we could see another pullback, and then that would target our lower levels of liquidity that I mentioned already is resting here, and also potentially down here. So if we do end up retesting the lows because of whatever news comes out, it will just present us good opportunities to try and buy the market back up in an attempt to target our all-time highs once again. So just to be clear, once again, price is in a bullish trend at the moment. My base case is to see price pull back and sweep liquidity at this level. And once we've swept this level effectively, we can now hopefully see price target the all-time highs once again. It's interesting to see that the amount of fear that's in the markets at the moment, and that's why I believe that it's important that price does pull back and sweep this liquidity. I've been waiting for this to occur for quite some time. Since pretty much since the end of May, I've been talking about seeing price pull back to sweep liquidity at this low level down here. However, over the last few days, all we've seen is price build up some more liquidity at these levels, of price just going higher and higher. But there's been no momentum for us to break out above our equal high resting at this level right here. So if we get a red candle close today, I can probably expect Tuesday to be bearish, Wednesday to be bearish, and then where we'll see a confirmation of the decline, or what I'd like to call a market structure shift, is when we get a close below this candle. The candle I'm referring to is this green candle right here. Once we get a close below this green candle, we've had our sweep of liquidity at the highs. We've got an equal high as well. I'd expect price to be targeting this level down here. That being said, if we get price to close below our level of liquidity, then we can expect price to target even lower levels of liquidity, which is going to be resting below here, around here, and around here. So it's going to be interesting how the next few weeks play out. My bearish bias is simply built up upon the idea that we haven't yet swept this level of liquidity. And we already know that for price to go higher, we need to see our levels of liquidity taken before we can move higher. So I'm being patient in getting aggressive into long trades. Over the last week, I have taken some long trades, but none of the trades I've held for long periods of time. And this is the beauty about trading and the way I do trade. I'm able to capitalize on small movements in the market, just taking one-to-one positions. I'll show you guys really quickly what my account looks like, because I am expecting a payout later on this week. So I'm expecting a payout on the 10th of June. It's been quite slow in the markets because we haven't had much movement. But I've been taking small trades. Like even this week, the only trade I took was this one that was able to be profitable. The rest of them were just a bunch of break-even trades that I wasn't really able to capitalize on, unfortunately. But it's better to be break-even than to actually lose money in the markets. That being said, if we take a look at all the payouts that I've received on this account, and this is going to be, I believe, my fourth payout. I think I've done over around $15,000, and if we include how much I'm going to get paid out in a couple of days, I'm sure it's approaching $20,000. So if we take a look at my spreadsheet, what I've done in these accounts, I think is 14,000, so just under 15k, and these are some of the payouts I've received, so it's not too bad. However, hopefully we get the markets moving again in the next couple of weeks and we can start making some money again, some real money. However, I appreciate you being here. I hope you found value in the video, and I'll see you in the next one.